Well, good evening and welcome to this trading anniversary. What is it? The trading challenge anniversary update. That's a mouthful, isn't it? So we are 5 minutes early at the moment, but I have to get us up and running to make sure that the camera's working and that all the software's working. So if I can just have a look at the chat boxes, if you could just say hi and you can see me okay, then that's good. That's a good start at least anyway. So I'm just having a look in the box down here to see if someone can just put, yep, we can see you all okay. Well met. Okay, hope is all well. I'm not still not sure whether, oh yeah, okay. Whether Lime Biscuit actually was acknowledging that you can see me okay. But anyway, that's good. Um, Hi, Richard. Hi, Gonzabena. All good, Richard saying as well. That's what I needed. And an they okay there from Gonza. And yeah, we're getting plenty of okays in. So that's good news. So the other good news is we've actually got a few minutes. Oh, it's come up on my phone. So we've got about 3 minutes or so before we can officially get started. Like I said, and then we'll get cracking. So if anyone's watching this as a recording right now, just fast forward it a few minutes, and we'll get to the bit where we're there. Now, I'm assuming at the moment you can just see uh, me on the camera. So I will, of course, be sharing my screen. I'll be doing that when we get started in just a few minutes' time. So um, Aiden, no excuses, never give up. No, exactly, exactly. It was funny actually. I was because I'm broadcasting through this software called StreamYard that I always broadcast through. But when you folks started putting messages in, and some of you were putting like uh, emojis up, and it was describing the hand signals, and I'm thinking, yellow face does this. What's this? And it was just it wasn't your emojis weren't coming through, so it was describing the emoji, and I'm thinking, face hits head. What? I've got it now. I've got it now. And actually, your emojis just come up there, Aidan. So we're all good. We're all good. But we can't actually get started for uh, just under 3 minutes just yet. But yeah, it's a nice time of year to do these updates at the end of the year for obvious reasons. Even though I started this challenge in June of 2020, so I'll talk about that in a minute. But it's still nice to do it as a wrap up as we get closer towards Christmas. Have I had any fitness challenges for myself this year? No, not really, Lime Biscuit. I got into surfing this year. I surfed years and years ago when I was young, but never that great at it. But I just did it, and then I went to the wave down at Bristol. So I thought I'm going to learn to do it properly. So I've had some lessons down there, but no fitness challenges. No, I haven't been doing anything like that. Although I am seeing my brother-in-law in January, because he's out in Dubai now, running he's got gyms out there as well. So I will be seeing him when I'm out there. But no, nothing outside of normal day-to-day ticking over training. No. How are we doing for time? We are just at 6:59. Let's have a look then. Yeah, it's nice to get some sun and to see my brother-in-law there as well, Rachel's brother. So yeah, we've got about 30 seconds before I can officially get started. So all right, okay. Well, I hope that trading and has been good to you, and if it hasn't been good from a P&L perspective, then still from an educational perspective this year, because we always are learning new things, not necessarily the new indicator, I don't mean like that, but we learn from the market itself, from what the market's doing and what our interaction with the market is. So we always learn from whatever it is that we're doing over a given period of time anyway. Go to Brazil to surf? Oh, right. very good. Yeah. Um, I think I'd better improve somewhat before I go to Brazil. So anyway, so right. I think we're just about there where we can get started. So, and right now, there my dog's barking just outside my door. So I'm going to let him go before we get officially started. Right. I think we can pretty much get on with it now. So, a warm welcome to you all to this live broadcast on YouTube. And this is the annual Trading Challenge Update broadcast. So, for those of you who are not aware, I've been doing this Trading Challenge update. Good evening, good evening. Or Trading Challenge now since June of 2020. But in fact, it goes back before that. I started doing these trading challenges back in 2013. And I did it initially just to um, show people me trading over a sustained period of time, showing my accounts over a sustained period of time. So that was the whole point of doing these, and it started, like I said, 10 years ago now, and I'm still doing these trading challenges just to sort of give people an idea of uh, what I get up to, and what's achievable in the markets. And you see the good, the bad, and the ugly, as I said on the YouTube channel here. So you see a bit of everything. So in tonight's broadcast, obviously I'm going to be going through the results. I'm going to be talking through the some of the trading itself, as far as the markets. I'll bring up a chart and show you what I've been trading this year, what's worked, what's not worked, and we'll take things from there. So first things first, I think what I'll do is I'll share the screen, and then we can then start with the accounts, and then take it from there. Tommy, how do I? Okay, I can't really be taking questions this early on in the broadcast, but the question is, how do you manage to trade many accounts? I don't day trade, swing trade. So I have different accounts. It still takes time if I'm having, but a lot of the time on the accounts, I'm not taking the same trades across all of the accounts at the same time. So, but sometimes I am, and that can take a while. It can take me 5 to 10 minutes to place trades across all of the different accounts. So, but it doesn't matter when you're swing trading. So that's how I go about doing that. But I don't use a copier because, like I've said, a lot of the time I'm in one account I don't want to be trading on, and another trade account I am, and it's not as simplistic as just placing a single trade and then it just copying across my other accounts, because I want to put different levels of risk on different accounts as well. Okay, so let's bring the screen up. Okay, so you should be able to now see a portfolio report with Saxo Bank here. So Saxo Bank are the broker that I've been using this account for years, when doing all these challenges. This is the same challenge account that I've been using for years. Now, for some of you, you're going to be thinking, who's this guy? Yep, that's my first name. Charles is my middle name, and that's what I go by, or Charlie is what I go by. I don't like my first name. Nothing against anyone who is called Kevin. It's just one of those things. My wife never liked it 25 years ago, and she's been calling me Charlie ever since. So, and everyone calls me Charlie. So, but of course, on official documentation, then my full name is Kevin Charles Burton, so and so this is the portfolio report generated. Now, this, as you can probably already see, is from June 2020 when I started around this time, and I've shown this report before. This is the same portfolio report that I shared this time last year. So we're just a bit around the same time as last year's update. So for those of you who were here last year, that's fine. But I just wanted to recap a little bit of what this challenge was all about. So this challenge was to see, in June of 2020, I had £20,000 in this account. Okay, so I put £20,000 into this account, and so the goal was to turn it, as some of you will remember, into £70,000. That was the goal, to try and turn the 20,000 into 70,000. Um, that was it, really, 70,000 or so, and that was the goal. But and then as we got into it, um, it was, and I got it up to 70,000. I thought, well, I might as well continue, and that's the way that it's evolved, this challenge. So I hit the 70,000 a while back. No, I don't know, I can't remember how long ago now, a year, 2 years ago. Um, but then I thought, well, I might as well continue, because I actually do genuinely enjoy doing these trading challenges. And if you remember at the end of last year, I said, well, I might as well just continue and see if I can get the account up to maybe £1 million at some point. And as I said in that broadcast last year, it may take me 5 or 6 years to do that, based on if I could average around about 50% a year. Now, I know that every year is different. Some years I might be able to do more than 50%. Other years I might do significantly less than that. But that's the challenge of trading. So let's go and have a look now at this. Oh, let's get the pen off now. I put the pen on there just because it had my address on there. So let's take the pen off. So this is where we'd got to last year. Okay, so I think you can still see me all right. Can I just double check? I'm assuming I'm in the corner somewhere. Yeah, I think that's the case. Yeah, I think it is. Yeah. So, Glenn, yeah. So, um, so this was the starting balance. It was actually at 20,000, and I went straight into a drawdown. But I've never been out. Well, this is the statement I took last year. I've never been able to get the statement right when it was on 20, because I must have been trading it straight away. But as of this time last year, the total return down here was 400, and the blurry images. Oh, that's a shame. You Okay? Are there other people having blurry images? What, of me or the screen? Because it might be at your end, it might be me, but just no one else has mentioned anything. So it might, if no one else is saying anything, Kartik, the screen. No, Aaron's saying all good. Yeah, the stream is fine. I would log out and log back in again, Kartik. It must be at your end. Right, I'll continue. So yeah, so as of this time last year, the total return was 405%, because the account value at the end at this time last year had got up to 96,000. So for those of you who were here last year, yes, I said, well, I might as well just keep going and see how we get on. The one thing with doing challenges like this, and trading challenges, that I always say, and you'll see me say this on the YouTube channel, that it's a weird thing, because I'm doing a challenge with a specific goal, but you'll see me say, don't have goals. So in the main, by all means, have a trading goal if you want one, but what I mean is, you have to be very careful of getting caught up with your goal. So otherwise, you're looking at the destination, not at the journey. And I find, especially in trading, if your whole focus is on, I've got to get this to 90,000 or 70,000 or 100,000, then it's amazing what a distraction that can be as far as your trading is concerned. So by all means, have a loose goal, and then chuck it in the drawer and forget about it, and focus on just the process of your trading. And I have a little confession here for you. So I have, up until I shared all this with our members a week this time last week. So I did this what I'm doing here with yourself with my members in our community last week. But and I said to them last week, I'd only looked at the account at the statement literally last week when I downloaded the statement because I haven't looked at it all. I think I might have looked at it in about February time or so, and then I just thought, oh, I don't need to look at it. I see my winning trades, losing trades as they're coming as they're happening, but I wasn't bothered about looking at the account balance for the same reason I've just said. So a little tip there, even I don't do that when I'm managing my main accounts and the funds that I manage. Of course, I'm watching what they're at. But as far as something like this, where I've got a very aggressive goal with, I don't look at the account balance because otherwise, if I hit a milestone, even I'm more likely to think, "Oh, great! It's got to 100,000, or it's got to 110,000, or whatever it might be, 105,000," and it might just put me off a little bit, thinking, "Oh, right, well, let's see if I can get it to 110." And then again, even I'm being entrapped there with trying to looking at the results rather than just focusing on the trading. So I haven't looked at the balance through most of 2023, and so just left it alone. Focus on the trading. Okay. Um, you saying it's my settings? Sorry, I'm just seeing. Um, just catching up on some of your chat there. I'm not sure. Oh, he's on a mobile phone. All right. Okay. Um, okay. Do you manage small accounts of say 5k? Myself, no. If I don't know what you mean by that, Glenn, but I do manage investors accounts, and yes, I do have. There are investors accounts with 5k in them, yes, or that they put 5k in, yes. Right. So that's where we got up to last year. It's a little bit of a recap of just what I'm doing here with the challenge. So the point of tonight is to update you on how that's got on, but also talk you through how the year's gone as well, and some thoughts on the year itself. So if I come to the year for last year, this was what the return was on the year. So it was a very strong return last year, 143% for last year. Any of you who were here last year, yeah, these numbers are exactly the same. They're on the YouTube channel here. The recordings here on the YouTube channel from this time last year, so you can see it's all the same statements from last year. So that was a very strong return. And I can tell you right now, I didn't do that return again this year. So it was, and like I said at the time, anyone who does, in excess of 100% in a year, that's a very good return, and you can't it's unlikely you're going to get returns like that every year. Even when you're trading aggressively, there's a flip side to trading aggressively in that sometimes when you're trading aggressively, your it works out, and that's great, and that's where you see the big returns come in. But of course, there are points when you're trading aggressively, and if you have a string of losing trades, then of course then your P&L comes down as well. So it's a trade-off, really. But it's been an interesting year this year, and I will go through that with you. So that was last year. So okay, let's go and have a look then. So as of last year, the total return was 405%. As of December, it's now a total return of 571%. Now you might say, well, that's 140% or 170% on top of last year, Charlie. Well, yeah, but it is on from the total from the beginning amount down there. It's not quite correct because it was 20,000. It's just taken it from 19,000 there. But yeah, from the beginning, but from last year's number, so we go back to from 96,000 last year, then and I go back to where we just were, then it's not 570% or 170% from that number. So The account value has gone up to 128,000. So in fact, it's and this is the statement for the year itself, for just the year itself. It's a 31% return. So many of you may well have outperformed me, but like I've always said, and like someone said at the beginning, um, it's this is real trading. These are real results. I'm not fudging anything. There's no point in me trying to do that. And if I was fudging stuff, then maybe I'd be showing results of 300% every year or 500% every year. I don't know. So it was a smaller return this year, and I'm going to explain why. In fact, I was on the cusp of a very, very good return, and I'll explain why in a moment. Why that didn't materialize this year. So it was a very interesting year from a trading perspective for me, because of some of the swing trades I hold, that some of them were looking really, really good. But in fact, alas, they rolled over at the last. So some of them got really close to profit targets in relative terms and then just rolled over. I'll explain all that when I go to the charts in a moment. So, but if you asked me at the beginning of the year, Charlie, or if you told me at the beginning of the year and said, Charlie, it's going to be a challenging sort of the market is going to be challenging this year, but you're still going to do 30%. I'd take that. I'll take that any day. So to see yeah, but Timmy, I wouldn't ever go onto those sorts of sites. I manage my own funds. Why would I want to put myself on something like eToro and just for the masses to be able to access what I do? No, I like keeping what I do um, to a smaller community. I have my trading community, and what I do with them on a day-to-day basis, that's what I enjoy. I wouldn't want to have all that access to thousands of people just being able to copy my trades. No, I keep that for my funds. Okay, I can see there's a lot of questions coming through, and I've got to be careful. I do want to answer your questions, and I'm going to, but we haven't got into the nitty gritty yet. So let's go into a little bit more. So some observations. So if we go back to the overall return now, so this is the equity curve now since the beginning, since June of 2020. So you can see that again, the equity and it's not a one-way street. Moves up, pulls back, moves up, pulls back, moves up, pulls back, and moves up. So that's more likely, certainly for my equity curve, that's atypical of my sort of equity. So it's moving around a lot. It's not just one steady right to left. This is the equity curve itself, or the equity return itself. So you can see, just other than that small dip at the beginning, it's delivered. That's the return that I'm on at the moment, and we don't know what the return's going to be for next year. But I'm hoping that where have I gone to? Yeah, I'm hoping to get this 128 up into the upper 100,000s. That would be the goal for next year. So let's go and have a look. This is the equity curve for this year, for 2023. So you can sort of see that I spent a lot of time just sort of peeling back into March, then went to new highs, then pulled back, drawdowns through the year. So I'll explain all of that. And then we got to sort of halfway through the year, and then gradually just started going up in the second half of the year. So again, fairly normal, really, for a swing trader, at least anyway. I'm not trying to be in and out of the market every day. I am in the market every day, but most of the time, but not to short-term trade. I'm interested in trying to get those positions off and then trying to run them. A lot of the time, they'll just roll back over and stop me out, as I went through last year. I have loads of stop outs. But when I do get those big risk-reward ratio trades, they more than pay for the stop outs and normally give, the return on top. And so, as you can see here. So what I thought was interesting, I thought I'd show you this year here when I had a look at this, was the instruments traded. So you look, the euro dollar is responsible for 28,000 in P&L. The pound dollar minus 330, so it's probably about one trade. And the Aussie dollar, I think I tried about two trades in this summer, and both of those lost. Outside of that, looks like I've traded Wall Street, so the Dow. So I had a losing trade on that. Had some winners on the S&P there, and then lastly, I think there's the Nasdaq. So I've had, it looks like a one trade on the Nasdaq. So you can see where most of the concentration has been. It's all been in the euro dollar basically, because that's what I'm trading most of the time. So let's go over to the charts and have a look at those. Glenn, no. Well, no, I don't swing trade crypto. No, I will buy crypto and just hold it for, I don't know, 6 months or so, but I'm not technically trading it that much. No. Okay. I don't know, Tommy. Well, I'm going to talk about the market this year. So, like I said, I'm in the main, and some years are different to others, but in the main, I trade a lot of euro dollar. It's the biggest currency pair. I just find it. I wouldn't say easy because I still spend a half the year losing, or get into trades, waiting for them to see if they're going to play out, maybe getting trailing stopped out as well. But you get used to, and I don't want to use that old cliche to say the personality of the market, but you do get used to how the market moves a bit. And the euro dollar is basically the dollar index itself. You're just trading an inverted dollar index. So I like the fact that I'm trading a highly liquid market, and most of the time, and I'll put a few a few trades just through the year on the S&P or the Nasdaq, and that's about it. So but another year I might go and trade gold or some other markets. Just so happened this year it was mostly the euro. So I just want to talk a little bit about the euro here. So if we let's get rid of that. Okay, I can zoom in. There we go. Perfect. Right. So if we're looking at this chart of the euro this year, the first thing to say is the euro capped out here. We'll come back to this in a minute. It capped out at 112.70 or so, and it made a low of 104, basically 104.50 down here. So throughout the whole of 2023, it's the beginning of the year over here. It's had something like an 826 pip range. All right. Now, talking of coming back to what you're saying about is this year different? Well, I don't know, but certainly for me it was, because the euro's average range is 1,650 pips. So it only ended up doing half of its average yearly range this year. So and that was part of my trading, was looking, for knowing full well as we came through the year that there was this real capacity for the euro to expand its range, because in the first uh, part of the year, so if we've got, this is January here, so I knew that by the time we got to sort of May time, so we're already 5 months, 4 to 5 months into the year, and its range was relatively small. So, like many of you who might trade off of smaller time frames, it's the same on the bigger time frames as well. I knew that the average yearly range was 1,600 pips. Not that I'm going to trade it for 1,600 for that total 1,600 pips, but I knew that there was plenty of scope for it to at least expand its range to maybe 1,000 pips or so. So let's go. Keeping that in mind, when it came to the euro this year, what was I doing? My analysis for much of the year was looking on the long side of the euro. So back through here, I was on the long side. This was a difficult period. You look at a chart with the benefit of hindsight and say, oh yeah, it's just pulled back and and up it went. Well, Yeah, but this was during that period in the spring of uh, when we had the what was it? Um, the mid-tier banking crisis over there, Silvergate affair over there in the US. So we had that, and then after that, Credit Suisse went bust. This was big stuff that was going on. It was affecting the market. Credit Suisse, European bank. That affected the euro as well, and yet the euro shrugged it off and did go higher. But the chart only shows you so much. What was going on in the news and all of that was really quite pessimistic overall. So anyway, I managed to get in on the long side here after several attempts. First of all, getting stopped out, and then it started having a run. And this was having a really good run. And then literally, you can probably see my first target was at 111 over here, and it got to about 2 pips, I think it was 2 pips away from my first target, and then just rolled off. And so I literally missed that, and it rolled off, and I ended up just getting trading stopped out. So now, what I do, and many of you will see on the channel in my trading, is I'll get into a trade. So I'll initiate a trade somewhere down here, and if price starts coming up, I'll add to the trade as price starts coming up. So the thing with adding to trades is it's brilliant. It helps really compound the trade. But what it also does is it brings up your average price. So my average price starts coming up because I'm adding more positions in as price is going up. So when price comes down, I'm much quicker getting towards the break even point, or in even on a deeper retracement into a loss. This actual trade was in a lovely, I think, oh no, I can't remember how much profit was now, but on this one, but it was in a really good healthy profit and ended up making nothing from that trade. Anyway, so it pulled back here into the June. I had buy signals coming in again in this zone, so I bought again, and this time had a really interesting run here. It pulled back, and obviously then had this really good run. Now in the 112s, at 112 and at 112.70, I did bank some profit. Okay, so there was some profit banked up there. Now, so that was good, but at this point on the challenge account, the challenge account was up over £50,000 in profit at that point. Um, Over £50,000 in profit at that stage, at the highs. Now, bearing in mind, like I've already said, the euro, even at this point, had only done a 700 pip range on the year. So there was plenty of scope. And I'm not just basing it on the range, but there was plenty of scope for the euro to extend its range. My target was about 114. Okay, around 114, my ultimate target. So I banked some profit here and was looking for more up there. If we'd have gone up there, then obviously the overall P&L would have even been higher, and I'd have probably been sitting here talking to you right now on I dread to think well north of 150,000 in profit. But that's the way it goes. It just didn't happen, and that was what was interesting for this year for the euro. It just got contained. It got contained in this 800 pip range when it does on average twice that. So it's just the way it goes. My analysis was looking for more upside. Now the irony then is that the market rolled over and I got trading stopped out. I think I ended up making about 10k or so on that trade. Maybe it's a little bit more, but somewhere between 10 and 20k on that trade. So I got trading stopped, but I still ended up making a profit on it. But the irony was that for this year, and I think I put a video out about this just last week, that the bulk of the bigger gain for me on a singular trade this year was actually once I got stopped out. If I zoom in a little bit here, was I entered a short after this outside reversal day here. So we had an outside reversal day. Price ticked up and then completely engulfed the prior day here. So after that, the following day, it was around about one bit over 110. I shorted in this range. Okay, so I entered a short and then added to the short in this position. So I ended up, and then once price started coming down, I started adding to the position as it came down. So the irony was that it wasn't the trade that I thought, or the direction even that I thought that where I'd be making my money this year, but it was down here. So I ran it from the low 110s with add-ins along the way down to my final exit being at 10, literally 106.03, I think it was. So we'll call it 106. So, and that was the irony. It's funny how trading goes. The trades that sometimes you think are going to be the ones that make you your money, so to speak, or the ones that you think are going to work out, it's not always the case. So, and then the ones that you don't really think much of end up doing pretty well. So anyway, that was the way it went. I have been long the euro dollar back on this upside run here. Some profits have been banked as well. And I'm not going to go into the details of those of this long because some of the positions have been banked now. But and so if the euro rolls over from here, well, again, it'll just end up amounting to, well, I've banked some profit on this long. If it rolls over, then so be it. But I am long from right away down in this whole zone down here was the early entries. So we'll see. I don't know how that trade will play itself out at the moment. I think that the euro dollar, there's been a bit of a switch at the moment. Just in this past week and a half, we had GDP numbers came out of France just a week and a half ago. They came out pretty poor, came out minus 0.1%. And then the inflation dropped quite a long way in the Eurozone that same week, a week and a half ago. And since then, the euro has done quite a deep retracement. So as the market's starting to price in the ECB cutting rates more aggressively next year than probably the Federal Reserve. And so as a consequence, the euro's fallen. It's stabilized over the last few days, but we've got the FOMC tomorrow night. So it wouldn't surprise me if the euro comes down tomorrow. But I'll dust myself down and move on to the next trade. But that's in essence what I'm doing. I'm not looking to try, and it's the same as what I do on my funds. And I can see there's a lot of questions. I will answer your questions. But it's the same on the funds. I'm not looking to try and make money every day, every week, or even every month. All I'm interested in is the trading. And what I'm interested in is getting into a trade based on a top-down analysis approach. So what I mean by that is higher time frame first and then working my way down through the time frames to the point of execution. So as a swing trader, that means I'll start at a quarterly time frame and then go down to the monthly, the weekly, and the daily for my analysis. Within that analysis, I'm also looking at intermarket analysis as well. So if I'm going to trade the euro dollar, I want to see, well, how's the Australian dollar against the US dollar getting on? How's the Kiwi dollar? How's the pound dollar? How's the dollar yen? I want to see that interplay amongst all of the markets. So although I might only be trading the euro dollar, I'm analyzing constantly those other major currency pairs, the stock market, because they're all related, the bond market as well, plus gold and silver. So I'm looking at all those other markets, even though I might only be trading the euro. So for me, there's top-down approach, intermarket analysis, and then sentiment as well. Now, sentiment is great at certain times when sentiment gets to extremes. And we have seen extremes in sentiment this year at times. But So when we do get extremes in sentiment, then they're really useful. But again, on a day-to-day basis, it's not necessarily there. But that's my overall approach. It's obviously a lot more technical than what I'm just saying, but those are the key principles of how I go about trading the market. Plus, obviously, taking on board what's going on fundamentally, what's the news doing, all those things as well are important. So, but I'm not coming back to it. I'm not therefore trying to make money every day or anything like that. I'm not that. I'm not. I used to be a short-term trader. I used to do a lot of short-term trading years ago. Many of you know I've won trading competitions and done all that stuff. But for my time available, which is still takes up a lot of time in my analysis, and I'm with my traders in my trading community every day. But but actually clicking buttons and trading is less time. So I want to get into a trade and potentially hold it for certainly multiple weeks, and if I can, for 2 or 3 months as well, if I can. And so that's where I get the most enjoyment from my trading, is trying to get into a position and run it and run it and run it and add to it, and then get those outsized trades. But those outsized trades don't come along all of the time. I did a webinar earlier this year called The Road Less Traveled. And this sort of style trading is because most traders out there, they want to be right all of the time. They just want to be having wins all of the time. They want to have lots of gains. Whereas I'm not bothered. I'm quite happy. I use the analogy of I'm just throwing that fishing line out and I'm catching lots and lots of little tiddlers that I'm having to throw back. And then occasionally I'll go and get a great big carp. And that's my approach to trading these days. So I could bank my profits sooner, like back here in the summer. I was up a significant amount at that point and could have happily banked. It was a decent level up there, but no, I banked a small amount because my analysis was still looking, the ranges, all this other stuff going on. Still at that point, still looking for more upside. As it turns out, it didn't happen, and it's the same back here as well. Just didn't quite hit my target. So it was one of those years where I'd got into a couple of really good trades and they just rolled over. If they hadn't have done and they'd just carried on cruising their way along, like in other years, then the end of year result would have been very different. But we don't know from year to year what is going to happen. So it's just really a case of saying, okay, I'll always take a gain, take a positive, and then going into the next year, well, I'm on the front foot. So it's not as big a gain as obviously as last year, but it's still going in the right direction. And so for me, I'll just focus on the trading and focus on whatever's going to be going on in the markets over this next 12 months and not focusing on the goal, just focusing on being the best at executing my trade plan. So every trade I take, I've got a plan for where my stops are, where I'm going to start adding in, where the targets are going to be, and I just keep following that process. And a lot of the time, they're not going to work out. Like I said, they're going to be those little fishes. They amount to nothing. But then I only need those one or two trades, really, just a handful of trades in a year to make the money. And that's exactly what's happened this year. So it's been really two trades that have made the money. That short trade here from the summer, and where's the pen gone? So this short trade here from the summer in the main, and this long trade here, which did get me trading stopped, but it still made a bit of money out of that. All the rest was little stop outs, and some small wins. But in the main, if I look at the bulk of the profit for this year, it was in these two runs. The rest of the time was just noise or this was a run as well which got stopped out, didn't it? That one got stopped out. And the rest were just plain stop outs or whatever. And that's it. And it's amazing that you just keep going from year to year and how often that tends to work out. So yeah, that's that's been the interesting part for this year. Now, going into next year, what will be interesting is that average true range for the euro dollar. Is a little tip for you. Um, it's still going to be around about 1600 pips. So it starts afresh next year. So it'll really be really interesting what happens. Does the euro can the euro get to at least 1,000 pip range next year, or does it stay contained? Only remain, we'll have to see. Now I could go off and trade other markets, but I'm analysing all of these other markets. Quite content. I can trade a market like the euro dollar and still make gains, and it was very close to have been making much more than 30%. So I'm quite content with that. Letting winners is hard to do. Yes, absolutely. I'll just come to the questions there. It's better to be in the game than not. Yeah, exactly. And exactly. So that's part and parcel of trading. Yeah, 100%. You trade e-minis. Yeah, okay. I don't know anything about those, but yeah, okay. Can you, sorry, funded trader accounts. I don't know anything about those. Can you show something about your trading room? Do you discuss trading up? Do you discuss trading upsets? And do you discuss your way of trading in the trading rooms? Yes, Lance. My trading room is my trading community. So that's where my members are. So they have all of my strategies. They see me talking through all of the strategies every day. You don't have to be there because all the sessions are recorded. So you can log in and pick up the recorded sessions as and when you want. I've got an app. So when I call trades, then they come through onto the app as well. But yeah, that's the whole point of my trading community. Is it's myself and my community, and you're welcome to join. But that's where I share everything. Yeah, they see everything. So all of the analysis, and we're talking analysis day in, day out, and training sessions, education sessions, news sessions. We're obviously tomorrow night it was FOMC. Today it was CPI out of the US today, so we had a session around that. But we had other sessions throughout the day today. So I'm always chatting with our members and talking through my thoughts in the market as well. But I've got other senior members who do training sessions as well, because we've got some very experienced traders. And so it's good to have that. So we've got members who have been with me for 15 years or more now. And we've got members who have only joined in literally in the last few weeks. So there's always people joining the community. So you're more than welcome to join. This year, the price action had been the toughest in the past 3 to 4 years from an intraday perspective. Oh, that's interesting, Dewsmit. Right, okay. I think that I can't obviously comment on that because I'm not intraday trading really anymore. Although I will take entries off an intraday setup, I might go down to like an hourly chart and take entries off of an hourly time frame, but that's only to get me in, and then I'm just looking to then hold a trade. But I think every year presents its own opportunities and headwinds to you, to all of us as traders. And so some years we end up navigating our way through better than others. And I think that, from an intraday perspective, as you're saying, then there's bound to be years which just are not suited to maybe to your style, or that given market is just behaving in a certain way. So there's all sorts of factors that can be at play. Timmy, you spoke about the average range for the year on the euro. Did you enter the first trade of the year with a long bias, looking for that sort of initial rise? Yeah, actually, what I didn't show, Timmy, was the end of last year. So my best trade of last year was actually this trade here. I'd got in the beginning of November on the long side and ran that up into December here. So I'd already been long into the December of last year, um, and then closed out somewhere up in this zone. Um, so did I have a long side bias coming into this year? In the main, yes. I mean, I will trade on either side of the market. Um, in fact, in fact, during this little pullback here, I remember being short through this pullback for a target which is about here at the time, and it just missed coming down to this. It was a moving average, a 50-period moving average. It just missed it, and then turned tail and went higher again. So, um, so I will trade on either side of the market, even if I've got a predominant bias. Even if I've got predominant analysis to the upside, I will still trade on the short side if there's reasons to do so. Yes. But coming into the year, yes, I definitely had overall analysis, where I was looking for the long side. I think what's interesting for the euro going into next year, going into 2024, is I think it's in a really interesting position here. Okay, it's bounced since October and now pulled back. But I think it's an interesting position that if the euro breaks down, probably back below, let's say below that low there, around about 106.50. So if it does break down to the downside, there's enough factors going on, certainly from a fundamental perspective, which could propel the euro back down to new lows below this year's low. But just as easily, if the euro starts to gather some steam again, then I could easily see it coming back up to this year's high. So it's actually not a bad going into 2024. I can see some decent um, moves coming on either side for the euro. I just don't know yet what that side is necessarily going to be. And I don't need to know. Obviously, I need to be in positions, but no one knows what is going to happen next. All you can do is put your risk on, manage your trade. Some of the trades are going to work out, and then plenty of them won't. And that's just what I do. So, um, Hashem, thank you, Charlie. I asked you last year's broadcast about you were a loser, and I took your advice about managing. It was boring, yet my account's growing slowly. Brilliant. That's great to hear. Brilliant stuff. Um, Indeed, market conditions were less suitable to this specific trading methodology. Yes, got quite burned on some trades that were home runs in 2022. Yeah, just the way the market goes, isn't it? So yes, absolutely. Dew Smith. Yeah. So yeah, exactly. Yeah, even though everything feels the same, they are unique, and you're right, they are different. Some years it'll work for us, and other years it won't. Slightly different markets. The patterns will look the same, but the outcomes can be different, and it's the same for me this year. But I can't have those big returns necessarily every year. I'd love it if I did. If I'd have done 150% again this year, that would have been nice. But and like I said, the it was sort of close. I was in some good positions, but they just fizzled out. So, but I won't ever sit there and cry about it. I'll always just say, well, it's one of those things, and you dust yourself down and you have to move on. Um, I think one of the biggest advantages that I have is the experience of trading for so long now, 20 odd years. So that helps because you get better at dealing with the rejection of the market when someone's only been trading a year or 6 months or 2 years. It's harder. They take it more personally. Um, and as a result, they can end up doing bad things like revenge trading and all of that sort of stuff. So it does get easier the longer you've been doing it. So as far as dealing with the rejection, you still get rejected all the time, but that's just part and parcel of the challenge of trading, and that's why it is what it is, and that's why so many people fail at it because they can't do it. But if you can transcend that, and work on the mindset, then you can embrace all of that uncertainty that's there constantly in the market, and then shrug it off when it's not working your way, and be there for when it is. Right, let's go back to the questions here. Um, well, Timmy, trade the range till it breaks. Well, Euro didn't even get to its range, so yeah. Um, right, your webinar on the second low frequency strategy, you've been back testing it, and caught the swing on the SPX today using CPI, and I'm still holding profit. Low frequency. Well, it hasn't set up on the dailies, so that might you have you changed that, Daniel, to an intraday setup? Is that what you've done? Because there's no setup on the dailies at the moment because the S&P hasn't pulled back. um, right. Is my time correct? Is your time correct? Oh, yes, it's 7:50 p.m. here in the UK. Yes. Get comfortable with your losses. The profits will then come. Yes, exactly, Aidan. Yes. Um, yeah, and you deal with it better now. Yeah, exactly. You have to. That's what I say, Aidan. You have to embrace the uncertainty that comes with losing trades. The market moving against you, and all those sort of things. You just have to embrace it. And the people who get better at that are the people who, they're still going to get their fair share, all their losses and losing trades and stuff, but they dust it down better. They dust themselves down better, which means it puts them in a better position to then move on to that trade, which does become a winner. Whereas someone else is still sitting there hesitating, thinking, "Oh no, I don't want to take this trade," and that's a lot of the time the differences between a successful trader and an unsuccessful trader. It's not that they've got some magic system necessarily. Do you still use eSignal or are you using TradingView? This is TradingView, Richard. Can you not tell? Yeah, it says TradingView at the top. Yep. Yeah, it's definitely TradingView. No, I stopped with eSignal. I think it might have been in the spring of this year, Richard. Was it the spring of this year or the last year? Maybe it was this year. It was either the spring of this year or the year before. But eSignal was just so expensive relative to TradingView, and TradingView's so good. So, but I'd already paid for eSignal in advance. I paid up front for like a year or so. So I was just winding down that subscription and then moved across to this. Do you ever think, even after 20 years of trading, that someone is there manipulating your chart to frazzle you out of your trade? Yes, the devil. Yes. I always say that there's like a little devil on your shoulder saying, "Go on, take the profit. Go on, move the stop up really tight. Jump out the trade. Take this trade." There's a little devil on your shoulder trying to get you to do the bad things. And I always say the market is trying to make you do bad things. The market is trying to entice you into doing those things, banking your profits early. When you've had a plan, right? I'm going to take my profit up here, and so the market is always trying to get you to do the wrong things, and tell yourself that, because you've got to. It helps you to think, "Oh no, I've got to stay on track. That's the market is trying to get me at the moment." Don't allow the market to do it. So yeah, make the market a living, breathing entity, and because it is, that's what the market's is going to do. It's going to try and shake you out, even when you're in a nice, profitable position, tempt you into just closing out, and it's going to make you hesitate and not take trades. All of those things. So yes, see it as a living, breathing thing, and it will help you by thinking of it that way. Showing up to the job and doing all the boring processes over and over again is what builds the discipline and tolerance to deal with 10 to 15 losses in a row. Yeah, absolutely. Yeah. Because a lot of traders will have 10 to 15 losses in a row at some point. And so the longer you've been trading, then the higher the likelihood of that sort of thing happening at some point. So yeah, and that's why we have to manage our risk, so that we can handle having a long stretch at some point of losses in a row. Yeah. Richard, just wondered if you were using TradingView only for the purposes of presentation. Oh, I see. But yeah, the cost of these. Yeah, yeah. No, yeah, yeah. Like I said, I'd paid for it up front, and so I think it must have run out this spring. I was using TradingView alongside it anyway, and I really stopped using it in the months leading up to it, but it was still on subscription. But yeah, there was no need. So yeah, I do like TradingView. It's very good. Based off your report, yes. Do you think it's wise to close all long positions in December and start fresh in January? If an account is small, could there be drastic shifts or not really? Well, if you've got stop losses on your account, it doesn't matter if your account's small or what it is. You've just got stop losses. So it doesn't matter what the size is. So that would be my answer, is that you should always be using stop losses. The amount of people on my YouTube channel who send me messages saying, "Oh, I just blown up an account because I wasn't using stop losses," it really, really upsets me when I hear about traders not using stop losses, because it's the number one thing that kills traders' accounts is not using stops. So yeah, coming back to your question, no, you shouldn't need to do that. If you're in a position, if you want to start afresh, bearing in mind, if you want to start afresh, and what happens if that market that you're in carries on going higher after you've come out and you want to start fresh? Well, you've missed out on all that P&L. So I think you just stay with your plan. If you've got a trading plan with that trade, then you stay with the plan. So do I recommend holding on to winners with small accounts? Yeah, it's the same process. I've taken a 20k account and I've put a 500 and what is it, 570% return on it. That is all from swing trading. And that is all from trying to hold on to my winners um, and run the trades. So it's whether it's a 570% return on a 20,000 account or whether it's on a 2,000 account, it still would be a 570% return. So whether you're doing that, there's this obsession I find that a lot of people get into trading, think that they're going to make more money day trading than swing trading, and that's one of the reasons why I'm doing what I'm doing here, to prove that that's not the case, and that you can swing trade and still make very, very good returns. And so it doesn't matter whether yours is a small account or what the size of the account is. The percentage return will still be there. What do you think about trading year end in general? Do you think it's riskier, people with bad performance swinging for the fences on low liquidity? Well, I think that trading around year end, Timmy, I think especially for day traders, yeah, is probably not worth it, because the volume is so light that the market is very sticky price action. Once you get past usually about the 22nd of December or so. But there's been many years when there's actually been some reasonable price movement during the Christmas period. So if we go back to last year, we can see the size of the candles got smaller during that Christmas period there. So it did quieten down there. But again, from a swing perspective, if I'm holding on to trades, I'm not going to come out of my trades just because the market goes quiet for a while. I'm just going to stay with my plan. But there are other years. So yeah, coming back, the main thing is you're a very short-term trader. It's not really worth it. I think intraday trading, because it does go quite sticky intraday. Now, the year before, the market had already gone, the euro, this is just on the euro dollar, had gone quite quiet throughout the whole of December, really just choppy at least anyway. Um, but then the year before that, if we go back one more year, um, the market was having some really good price action through December. So I think it's a bit of a myth that people think that the markets just go really quiet. They do. They do go quiet, like the day or two before Christmas, and the day or two after Christmas. But after that, they can move around a bit. But certainly, from a volume perspective, volumes will be quiet until we get into January. And I think for intraday traders, then yeah, probably not worth it. But if you're swing trading, then you just hold on to your positions because the markets might still trend or move around. So yeah. Okay. I haven't scrolled up to the earlier questions, but I guess I could, but they were from a while ago. And T Doc said, I don't know if he's still here, but he said he's blown 12 accounts since last year. I do really well for a day or two, and then I blow up an account. It's like someone is manipulating the price specifically to my own individual account. No, that's not true. You are trading really badly. So yeah, you'd like to find out if how you're going wrong. So T Doc, I don't know if you're still there, but there's a reason why you're blowing up 12 accounts. It's not to do with the market. There isn't a conspiracy. The reason you're blowing up accounts is because you're over leveraged for starters, and that's the main thing that helps people blow up accounts. Over leverage, not using stop losses. If you are using stops, you are still, yeah, you are. I have to be honest with you, T Doc. So anyone who blows up 12 accounts, you're doing something wrong. It's not the market. So probably too much leverage. So therefore, you only have to have a few losers, and that's it. And you've blown up an account. Or you're not using stop losses, in which case you only have to have one or two go against you, and you blow up an account as well. Um, so yeah, reduce your leverage by sounds of things would to start off with, and it keeps you in the game. You only really should be risking up to 1% risk of your total trading account balance on any one trade. So if you've got $1,000 in an account, your risk per trade should only be $10. So that's what keeps you in the game and stops you from blowing up. So whereas if you've got $1,000 in a trading account and you lose $300 on a single account on a single trade, well, it's only going to take three losing trades, and you're out. So you're not giving yourself a chance to be profitable if you're too highly geared. Yeah. Okay. So you are using a stop loss, but it sounds like you must be you must to blow up 12 accounts. You have to be risking too much. So look at your risk. You need to massively reduce your risk. It may well be that your trading style is incorrect as well. It may be, but to blow up accounts that quickly, as you're saying, then suggests that you're way over leveraged anyway. Otherwise, you just have a long drawdown. You wouldn't be blowing up accounts. Okay. Did you ever need to humble yourself when you realize you are bringing in more than a steady income years ago? The market does a good job of doing that, Daniel. So I think that just when you get a little bit overconfident, I'm talking about myself here, it was always a sure sign that just at the point when I'd get overconfident, then I'd go and have a losing streak. So the market did a good job of humbling me. Yeah. And like I say, when I do these trading challenges, I was saying this with our members last week. When I started this current challenge to turn it into from 20,000 into 70, I haven't got a clue how I'm going to get it there. I genuinely don't know how I'm going to. All I know is I'm just going to trade. And yes, I'm trading more aggressively on the challenge account. So I'm risking like 2% risk per trade. But Nevertheless, I still don't know specifically how it's going to go there. I just focus on what I'm doing, focus on the trading. And so, if you spend too much time coming back to your point here, thinking about the money, then that can um, move your focus away from the very thing that you're supposed to be doing, which is focusing on being the best trader that you can be. So, but you're absolutely right, Daniel. You know, you do need to be constantly humble in front of the market. Yeah. But I think the interesting thing for me was, a big another turning point was when I started making, on a single trade, what some people earn in a year, and much more than that. And so, yeah, coming back to your point there, in trading, you hit these milestones, and so as you go along, but then that you sort of naturally gravitate towards them over time. Um, on my low risk account, maximum drawdown was back in 2018, and it was about 10%. So really not much because it's really low risk that I take, JP, on that. So it was about 10%. May not have even been quite 10%, but I'm risking a tiny amount per trade on that. So I don't make loads on that because I'm not trying to make loads of percentage gains on it. But the good thing is, if I do go through a drawdown period, then I'm not losing much on that. Yes, the Dewsmit, yeah. Um, oh, it's a prop account. Oh, okay. So you have a 50K account size and can use a maximum of 10 contracts. Yeah, you're just you're over geared, and that's why you keep blowing them up. Um, Yeah, I'm not a believer in prop firms particularly. No, there's probably some good ones out there, but there's a lot of bad ones out there. They have a vested interest in their clients, failing and then paying them a new challenge fee. So yeah, um, um, what's the average time of my swing trades? Well, it does vary. In 2022, Gadasa, it was about 3 weeks, 3 to 4 weeks, because actually I was banking profits a bit more last year. Just so the market conditions were different, the analysis was different last year. So it was about 3 weeks. But this year I've been in swing trades for between 2 months. I'm trying to think now. Two Between 2 and 3 months, and some of them. So if I can, the longer I can hold on, the better. But I'm trying to hold on for the analysis that I may have. So, but yeah, um, certainly this year I've been holding on for longer, yeah, than last year. But it might change again next year. Some trades, I mean, are just a vanilla trade where I might just take a trade and I'm just in it for for a few weeks or so. But a lot of the time, I'm trying to be in a trade. If I'm seeing a given potential target, well, it's probably not going to go there in the space of a week. It's probably going to take several weeks, if not a month or two, to get there. Um, for someone starting out, can euro dollar be a good starting point? Yes, Daniel. For euro dollar is it's not too spiky. It's not too volatile as a market to trade. Um, and you could just trade a couple of markets, the euro and one or two others, and that's probably enough. And you just get used to just analyzing those and applying your entry techniques, your strategies to those. So I'm very rarely flat throughout the year. I'm very rarely, even though I'm predominantly only trading the euro. Um, I don't spend much time actually um, not in positions. In your personal opinion, does proprietary trading results matter for investors? Um, I, I don't know what you mean. Prop firm business model is really based on the assumption that 99% will hit max drawdown. Yeah, exactly. Yeah. um, um, yeah, I'm not a believer, like I've said, in the prop firm model. Most of them are geared up to be making money from your application fees and all of that. So we've seen what happened with my forex funds just several months back when they went to the wall, got shut down, and so um, I think that industry needs more regulation. I think more regulation is coming because it's the promise of riches. And unfortunately, there isn't any, not in the real world. So for most people, they realize after they've been doing it for a while that they might as well just be trading on their own money. Um, yeah, exactly, Aidan. Yeah. Where do you find your trade management facilities? What's that mean? Sorry, Timmy. What does that mean? Where do we find your trade management facilities? Sorry, what do you mean? Best thing that helped me as a trader was having a daily plan. Yep, absolutely. Oh, my money's management. Do you mean the fund management? Yeah, just go to Pelican Asset Management. They're in London. Google them, Pelican Asset Management, and you can ask them for my funds. Yep, they're my regulators. Yep, it's all regulated stuff. Um, where do we? Yeah. Um, Yeah, having a trading plan. Yeah, absolutely. You only just found my channel. Oh, okay. Oh, nice name, OHLC. So good name there. But yes, absolutely. Yeah, having a plan. Yeah, 100%. Um, you do have a history of consistency and constantly withdrawing. Um, if I want to go look for investors, look for a job as a trader in a bank or so, will this history hold value? Sorry, I'm trying to understand what you're saying. Do you have a history of consistency? Oh, I see. Yeah, okay. If I want to go and look for investors or a job as a trader in a bank or so, will this history hold value? Oh, yeah, it might do. It's the language barrier here. Yes, if you've got a track record, then yes, it may well do. I mean, you've got to bear in mind most banks don't have traders anymore, so you won't get a job in a bank as a trader. It just those jobs don't exist anymore, really. So, um, but and you won't get a job at a hedge fund either because hedge funds take ex bankers, ex investment bankers, and you're not an investment banker, so you're not going to get a job. Um, so, but if you've got a track record, then yes, wherever it is where you are, go to try and find a regulatory body who will provide the regulations for you, so that you can then go and attract investors. Yes, I do it. I don't go out looking for it. I was asked to do it, so it wasn't something that I set up set out to go and do. I got asked to set up a fund, and then so happens I think I've now got five. But um, but yeah, that's it's important to be regulated wherever it is that you are, so you're doing it legitimately, and they're do it, and yes, do it that way. Um, Um, how many years trading track record do you have to have? Well, you would need to, Tommy. I guess, probably 3 to 5 years of track record. Yeah, yeah, it would need to be profitable. Yeah. Um, how many traders at hedge funds? I don't know, Kyan. I don't know. But when you do look at the stats, even within the hedge fund community, there's always a given percentage who are having losing years. So yeah, but I'm not a hedge fund. So, and I've probably got more experience than a lot of these hedge, some of these hedge fund guys. Not the really big big funds, but I'm talking about there's a lot of small hedge funds with 20 million in them to 50 million or so. So there's a lot of small ones out there. Pelican Asset Management. Um, thanks, Aidan. Yeah, fair enough. OHLC. Why don't I trade futures? I don't have to. um, it's as simple as you just get used to what you're trading. Do you think trading futures is going to be better for me, Kyan? No, of course it's not. Um, when I'm trading the S&P, even these days on the S&P, I just trade it on a CFD. I don't even bother trading the futures contract. I've traded the futures contract in the past, but it doesn't make any difference whether I trade it on a futures contract or whether I trade it on a CFD. And the same with spot FX. I could trade FX futures, but I'm used to trading FX and spot FX, and that's fine with me. So, um, you know, trade it. I think if you're an intraday trader, a lot of people get really caught up in oh, you've got to trade the futures market because it's a central exchange. Someone has said this to me recently. Makes no difference. If you are trading off the order book, you're an intraday trader trading off the order book, then yes, trading in the futures market itself would be useful. But that information is only useful on the little intraday stuff that's going on. So for how I trade, makes no difference. So yeah. Okay, right. Well, I think we're getting there now. So I've done the update. Next update will be this time next year, most likely. So, um, and we'll see how I get on the challenge over this next 12 months. So I'll carry on doing what I do, which is what I love, which is being here with my community in my trading room every day. I have to go to London for meetings and do all that sort of stuff once or twice a month. Managing money as well. So that's just what I do. I enjoy it. So, oh, crikey, Timmy. Let me go and have a look. uh, I could have to go onto my emails because I've got the. Let me have a look here on Google. Pelican Capital. What did you say? Is that them? I'll just double check. No, that's. Oh, it might be. Let's have a look. See, I never go onto their website, you see, because I don't need to. London. Might. No, that's not it. No, that is not it. Ah, Pelican Trading. There you go. You'll find the asset management side under Pelican Trading. There you go. Pelican Trade. That's got to be them, isn't it? I better double check actually. Yeah, it looks like it could be. That looks like their logo. So yes, yeah. I think that maybe because it's only myself and one other money manager. I think now. There you go. Yeah, I'm pretty sure that's them. Yeah. I think that's them. Yeah, that looks like it. God, yeah, I don't even know my own asset managers because I don't. go and look. So yeah, that will be it. Pelican Trading. Sorry, but you need to find their asset management. I could just give you Peter Watson's telephone number if you want, and you can, or his email address, and you could just email him direct. He's my, he's the one of the directors there. So let me have a look. Um, I know. That's so. Yeah, it is. It's peter.watson at pelicantrading.io. Yeah. Did you get that? Peter.watson at pelicantrading.io. I think we've got there. Yeah, it might have been Pelican Investments. I never go onto their site. I have no need to, but there you go. Right. Right. Any? I think we could probably do a couple of more minutes of questions if anyone's got anything else. Otherwise, we'll call it a wrap. But it's certainly been an interesting year. Looking forward to now. Oh, Daniel. Um, does holding profits make a difference if you hold and only withdraw when exchange rates are high? I don't know what you're talking about there. What's exchange rates got to do with that? So when you're in a position, doesn't matter what the currency pair is. Yes, it has to be repatriated into your local currency, but the brokers, if you're with a decent broker, they charge such a small amount for converting it back into your base currency on your account that's fine. Yeah. Why do people add to positions going in their favor? Wouldn't that mean you get in at worse entries as you go along? Yes, Kyan. Yes, you do. Yes, that's right. But the 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 point with that is that um, where most traders get it wrong is they take trades. Let me bring the pen up here. So they'll get long here, and then oh well, as it comes down, I'll buy some more at a better price. So when it comes up, I've got a better average price, and then it just keeps on coming down and down and down, and they blow up their accounts. And that's a typical thing that goes on with traders in the market. In They see things that way, so they start adding to their losses, or to their losing trades, as opposed to saying, well, um, this is the direction that I'm trading in overall. And the market's starting to move in my direction. Well, as it moves further down, yes, it does mean you're getting a worse price if you sell some more here and then you sell some more here. But overall, you're going with the direction of travel, and so it will still compound. Um, if you start trying to sell as it starts going up, then you're just going counter to the market trend. And usually that means that people end up blowing up. Oh, absolutely, Kyan. Have a full position at one entry and have a good stop. Yes. And then add to it. That's the point. So rather than so if I use this as an example, I prefer using long side examples. So if I use this as an example, so let's say you've got in down here with your full position down here. There's your full position. Yeah, you can just be in down there and then get up. Let's say that's your target up there. Yeah, you've had a great trade. But what I will do is I've got in down here with a full position, and then added here, and then maybe added, I don't know, wherever, it doesn't matter, over here, and then maybe added somewhere over here. So I get the benefit of those add-ins as well, when they pay out like that, and then that's how they pay out in a much bigger fashion. It's something which most traders don't want to do for the very reasons that you've just said, Kyan, is that traders don't like feeling uncomfortable. They like getting their stop to break even, and then they feel like, okay, I'm on a risk-free trade now. But and I'm not saying that everyone has to do it, because you don't. You don't have to add in, but because it is uncomfortable. But the road less traveled is always more uncomfortable, and that for me is what generates the bulk of my profits, is by doing that. So works for me, but you have to have a thick skin. Do you do regular updates on YouTube? Yeah, OHLC. I do. I try to put out 2 YouTube videos a week. I've got someone who chops up my videos and puts very short ones now out on YouTube Shorts for me. But I haven't got the time for doing all that. But yeah, I tend to put two videos out a week onto YouTube. Sometimes if I'm really busy, like tomorrow I'm in London again for meetings. Um, so normally I like doing a YouTube video on a Wednesday, but it'll be Thursday this week. So usually a Thursday and a Saturday, or a Wednesday and a Saturday. That tends to be the days that I put videos out. Oh, no, I don't often do a live broadcast, just a few times. I should do them more often, even though I only do this update once a year, but on the challenge. But I do periodically do a live broadcast anyway. So just look out for it. If you're following me, if you're subscribing to the channel, it will notify you if I'm doing a once I've uploaded it, then it will say, it'll ping up on your end and tell you that Charlie's doing a live broadcast or whatever. Anyway. Oh, you like the car? Yeah, I love that car, Daniel. Yeah, still got it. Yeah, it's only just over a year old, so I'll be keeping that for a while. Um, you're in the UK. Cool. Okay. Well, most of my stuff, OHLC, is not day. I don't really talk about day trading. Most of the time, I spend slating day traders in a nice way. But what I mean is, I don't think anyone who's a new trader has any business getting into day trading. You should swing trade first, and that, in my view, because that day trading is the reason why so many people blow up and fail, because it's so much more intense. So why not put yourself in a position where you've got a slightly better chance of success by swing trading first, and then progressing into day trading once you've been trading for a year or two. So, but yeah, I should do some more these sort of chats. I forget a lot of the time. It's just more I forget to do them. So I'll try and make the effort in 2024 to do a few more. But there's always regular content that comes on the channel, but I do forget to do these, and I can do them. So right, let's call that a night. Thank you very much for coming along and all your questions here this year. And next update in 12 months' time. Ciao for now.